We are very pleased today to launch another report. This time it is our yearly flagship report on international trade and the outlook for Latin America and the Caribbean. In this report, ECLAC estimates that in 2022, the value of regional exports of goods expanded significantly by 20%, as can be seen in Chart 1, driven mainly by higher prices of raw materials. This is less than the growth of 27% in 2021, but is nevertheless a significant expansion. Imports of goods grew 24%, that is 4 percentage points more than exports, as can be seen in Chart 2. Moreover, 25 of the 33 countries in the region suffered a negative shock in their terms of trade in 2022 due to the rise in food, fuel, and fertilizer prices that began in 2021 and worsened with the conflict in Ukraine. The only countries which improved their terms of trade were the next oil exporters. The region's exports of services grew at an impressive 45% in the first half of 2022 compared to the same period in 2021, mainly due to the reactivation of tourism, which fell drastically in 2020, but also explained by the exports of modern services like business and professional services, which have already exceeded their pre-pandemic levels. The prospects for world trade in 2023 are not good, due to the persistence of the conflict in Ukraine, the tightening of monetary policies, the deceleration of the world economy, the energy crisis in Europe, and the worsening of the pandemic in China. The slowdown in growth of our main trade partners in 2022 leads to expect a marked slowdown in the region's exports in 2023. At this difficult juncture, it is important and urgent to reinvigorate regional integration because despite the fact that only 15% of the exports from Latin America and the Caribbean go to the region itself, one of the lowest rates in the world, the majority of these 15% are manufactured goods with a high participation of SMEs, on small and medium-sized enterprises. Moving towards a large and stable regional market in both goods and services is important to achieve more efficient production scales, diversify production and exports, and reduce dependence on commodity exports.